Welcome everyone back to Pete's Investing Updates. We review the weekly progress of some blue chip stocks from Australia, the US and Europe. And these get it updated every weekend. This week we're focusing on our regular stocks. The stocks have dropped from the previous week's close, but they have recovered back to where they were at the end of last week. So hence the down then recovery aspect of this video for all these stocks. At first, don't forget to subscribe, click on a notification bell and like the channel to support it. Let's review the playlists very briefly. This is where we review the indices, we publish the indices videos. This is where we review the blue chip share price videos, like such as this one. And very importantly, the strategy videos we publish in this playlist, and that's where we look at the simple trading strategy, get some detail of the average down processes, and then some money management ideas. But as always, we're not offering financial advice. We're not recommending you buy any of these specific companies we're trading in this back testing. This is simply an educational video series. So let's get stuck into the chart of results first. And these are the companies we look at. First of all, we're looking at the Commonwealth Bank of Australia, BHP Australia from Australian Stock Exchange, Volkswagen and Telefonica from Europe, JPMorgan, Johnson & Johnson and Caterpillar from the US. What we're showing here is the codes that they trade under the various stock market channels. We look at the dividend yields they provide from the latest callings from Yahoo Finance and also the ex-dividend dates. Then we look at the profitability in Aussie dollars, in euro and in US dollars. And this bottom line is simply just a summary of all the above currencies. So it's just an index, if you like, of the above various currencies. This just shows the percentage returns of the buy and sell strategy versus the returns on the buy and hold strategy. And both of those profitability charts are in the charts when we cover them in a few seconds. This shows the maximum drawdown from the highest highs to the lowest lows in terms of profitability, and how much drawdown is required. And this just shows very simply how far back the charts go to, hence the 17-month horizon. So that's simply showing an average per month, which is basically that divided by 17. So again, we're looking at 17-month horizon on a 15-minute price chart. So let's look at our first chart, the Commonwealth Bank of Australia. Now, this is very typical of what's happened for all of these blue chip shares we're looking at. They opened up lower for the week from the close from this is the beginning of this week, Monday, the 19th of July. So they opened up lower for the week, although they have gone up for the whole of this week, in line with the previous week's results. That's very similar to all the charts. And I'll show you also the 17-month horizon, the Commonwealth Bank. Very simply, this is our profitability for the buy and sell strategy, the profitability for the buy and hold strategy. That's where we don't sell them at all. And this just shows you the number of shares we bought at each trade. And this just shows you there's 1 and 2 instances where we average down. So you can see here, we bought back here at the low there. We bought about 30 shares of the Commonwealth Bank. We bought another 33 shares there at that point, at the start of that pandemic in 2020. So overall, this is going quite nicely in terms of profitability. 1,064, our baseline's 100,000. So we've generated 1,064 for the buy and sell strategy versus 490 for the buy and hold strategy. And again, they're reflected in those figures there. You can see there, the next one is BHP Australia. So again, very similar to CBA. It opened lower for the week back here from the close of last week, but it ended up closing around the same levels as last week's trade. For the full 17-month horizon, this one, we had a couple of multiple trades in terms of averaging down. This one opened near the peak of just before the pandemic hit in 2020. We bought 51 shares back there. We bought another 73 shares back there, and it averaged down until it closed out there. Both of those positions were closed out. You can see the profitability generated. We made at 100,000 baseline, we made 378 with a starting point of 179. So I made about $170, $180 odd dollars in profits, and that includes that factors in the brokerage as well. All these other trades were single share of trades, except for this one here. We bought back here, we bought 52 shares, and we bought another 57 shares there and closed out. So at that point there, we close out those positions. You can see here the profitability generated again. So BHP is doing quite nicely again. Now you'll notice here as well, some of these stocks, I'll just cover here, some of these do generate more than the buy and hold strategy generates more than the buy and sell strategy, such as Volkswagen, and I'll show you the chart for that. Now why is that? The buy and hold strategy generates more over the long term if the chart goes incrementally upwards all the time versus the buy and sell strategy. You can see here it's had quite a nice rise during that period. Then went sideways for a bit of a roller coaster of trading back there. So this is where we only averaged down a couple of times here and there. So we still got this trade open with some averaging down of a total of 14 shares for Volkswagen. Then we look at Telefonica. Now again, this had opened up with 493 shares back there in June 2020. The market kept declining. We added another 581 shares there. You can see there with the steps of how many shares have been added. But you can also see the profitability going continuously down in line with the buy and hold strategy profitability as well. Whereas the difference is with the averaging down process, once the price recovered and once we closed out those 4 positions, again, we bought 1, 2, 3, 4 positions of Telefonica. We closed out those 4 positions there. You can see there from 100,000 baseline from where we started, we've closed out at a profit of €555. Now, again, look at the buy and hold strategy. In other words, had we bought the same number of shares and didn't sell them, we would have been negative below our 100,000 baseline of about $300 or $250 odd. All the rest were single trades. This was the only other average down. We bought 520 shares there and another 560 odd shares there. We closed out those two share trades. At that point there, again, that profitability there was from 1,086. We started off with 1,007. So I only made about $70 odd in that little trade. JPMorgan. This had a gradual rise from its downs for most of last year, and it's gone quite nicely, but again sideways for the time being. But it's generated 695 for the buy and sell strategy versus 312. I won't drill down into this week's performance because that's been pretty flat for the whole of this week. Beginning back here, it's recovered from the start of the week, but again, it's gone back to the previous week's closes. I'll just focus on, for the rest of the charts, I'll focus on the 17-month horizon. Next, we look at Johnson & Johnson. Okay, this is one that's generated better profitability for the buy and hold strategy versus the buy and sell by about $50 odd. Again, because the price chart has gone consecutively up for most of the period. So when the price chart goes sideways or down before recovery, that's when the buy and sell strategy outperforms the buy and hold strategy. Lastly, let's look at Caterpillar. Okay, similar result. The buy and hold strategy has generated $968 versus a buy and sell strategy of $824. Now, Caterpillar's had a bit of a decline in the last few weeks. And again, we don't get into politics or get behind the fundamentals of these companies. We just simply look at the charts and focus on the buy and sell strategy, which is the average down process for our profitability. So again, that's it for the results. Again, overall, we've been doing about between $400 to $500 on average per month with these trades. So that's been a pretty good result so far. And again, we're trading $2,000 lots in each of these. Every time we buy a number of lots, we're buying $2,000 worth of shares. That's it for the moment. We'll speak to you guys in next week's review. Don't forget to hit the subscribe button, notification bell, and like this channel to support the channel. Thanks, and speak to you next week.